Hello, 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 everyone. Happy mid-June. How is everyone doing? Hey, George. I'm hanging in there. Thanks for tuning in. We got a super busy week coming up, so I just wanted to give a preview. Don't imagine there'll be a lot of people on here live because it was not announced, but thanks, Options 22. They're still around. Options still some better than others. Good morning, Patrick. Again, thank you for tuning in. This is a week we cannot ignore. Today we can pretty much ignore. Consumer inflation expectations is the only thing really, besides some bill and note auctions. But tomorrow really kicks it off. Tomorrow kicks it off big time. We got CPI. CPI tomorrow, 1 hour before the cash opens, 7:30 Central, 8:30 Eastern. Do not ignore this, even though it's not the major one the Fed watches. If it comes in hotter than expected, it could influence the rate decision on Wednesday, 1 o'clock, and the press conference. But this time we cannot ignore the rate decision because we don't know if it's a pause or a skip or a hike or whatever. And then the press conference is going to be equally as important because they're going to lay out what we should expect from their perspective, or is they just going to say data dependent? But before that, we got PPI Wednesday morning. So CPI Tuesday, PPI Wednesday. Thursday, we got Philly Fed. We got our jobless claims as always. We got Empire State. We got a lot of numbers coming out on Thursday. We got retail sales. Thursday is just packed with data too, although it's still going to be recovering from the FOMC hangover decision. And then Friday we got Fed speak, we got consumer sentiment, it's consumer inflation expectations, and Friday quarterly OPEX, triple or quad. Technically, it's back to triple witching, but we still call it quad witching day on Friday. So this is not a week to take off, or you still got to manage your positions this week. That's what's really critical. Hey, thanks, Dave. Good morning, Jacob. So it'll be interesting. I'm watching if we do bounce up in inflation, we could get a slight beat. I'm going to keep an eye on that. The market map this morning, you see mega caps still leading it higher. Energy, crude dropping. Going to test some key support. So the oil and energy stocks pulling back, but everything else in positive territory just keeps going. The groups, the sectors. Energy, the only negative, well, basic materials is barely negative, but energy, the negative one, down nearly 100 basis points. And technology, consumer, cyclical, and comm services leading the charge higher. Fed watch, let's just refresh this too. See if we got the latest stuff coming up on here. Come on, Fed watch. Come on. Here we go. So 26% for the hike, and our probabilities are pause, hike, cut. That's where it sits so far, and then the massive series of cuts. We're going to have to see if this changes tomorrow, though. Fear and greed still in extreme greed. So I'm watching for a significant weekly topping pattern. Do we have one yet? No. So it is still, we can get pullbacks, but it is still in bullish market. Also, the market valuation index. The market valuation index is in overvalued. Overvalued. Okay, and this is back not as high as it was before the last major pullback. So yeah, we can definitely go higher, but this is in nosebleed territory. PEs, Schiller's back above 30. And the standard is 24.88. So, is stuff cheap? No. Can it keep going? Yes. Oracle after the close. We're winding down earnings seasons, but we do have Oracle after the close, and we have Adobe on Thursday. Kroger before the open on Thursday, and Lennar from a home perspective. Other than that, it's very quiet. So let's see where we sit. We do have a very minor topping pattern, which might be invalidated. But going into the open, and you can see it here better on the 4-hour, this is a little potential topping pattern. So I'm watching a close. If we get a key close, at least a 1-hour close, below 43.3825. That's the only thing. Is that a major topping pattern? No. It's a pullback to not even the daily rotation zone. Look how far we are from the daily rotation zone. So last week, in the beginning of the week, we moved sideways. Remember, 8 catching up, 8 EMA, watch it for push and price, push price. Then we got the big gap up on Friday. All right, and now we're still staying in that territory so far, inside day to Friday. If we break out, I don't have many key levels. There aren't a lot of key levels until, also we closed above on the weekly basis to 62.5 on the S&P now. So that makes the Dow, the S&P, and the NASDAQ all in, shifting the probabilities to still higher prices. And you see, this is the weekly chart. Even on any kind of pullback here, even if some pullbacks from back to 42.50 is just back to the weekly rotation zone and doesn't do major technical damage. Major technical damage doesn't start happening until below 41.50 at this point. What's the next minor area is 44.24. Next major is 44.81. We could get, though, we are very, very overbought with cycles at the top, and we got a lot of stuff coming on this week. So could we get some kind of more significant pullback? Yeah. Would that probably form a major weekly topping pattern yet? No. Again, it would be the secondary reaction. So that is key. If you're looking for very minor levels, using the pausing area from Friday, if it breaks out again, 43.20, 43.83, 43.96. The NASDAQ also has that little mini potential double top you see right here. Would be for the gap fill back to Thursday. Remember the gap, we had gaps on the futures going into Friday. That would be for the potential gap fill. Would need a close at least on a 1-hour time frame below 14,675. Other than that, not much. Stalled out on Friday at the 14,835 harmonic. And the minor levels, we got a cluster area about 14,943 to 14,976. Hey, Christoph. Hey, Richard. Thank you for tuning in. All right. And that these potential topping patterns, and they may never trigger today. They're just, and they're not big. Look, that only takes us back to the daily rotation zone on the NASDAQ. They're not big topping patterns. Dow also has the same thing that doesn't even take it back to the rotation zone. It doesn't even take it back to Thursday's gap. What's that? Would be a close below 34,104. Again, there's nothing potentially bearish today. The CPIs are going to be the big one that people are going to focus on tomorrow. Russell does not have a pattern after the 2-day pullback. Still after its blast off last Tuesday and Wednesday. Little pullback, so I'm watching for some key support area to form in around this 1860 area, which we already pulled back close to on Friday, but we don't have a key major bottoming pattern. This is almost a flagging pattern pulling back. You can see it here on the 4-hour. So I am watching to see if this breaks out with a resumption of trend to then see, again, the way I analyze this, I'm then watching on this little pullback. See it back on the 4-hour. What's the key area? 1881 to 1886. We get a close back above 1886. I'm watching for at least the retests of the high area from last week. That's exactly how I set that up. VIX, Little bounce up going into, why is there a bounce up if the markets are still going on? Because we have some key events. CPI, PPI, especially the Fed rate hike. People are buying some volatility. All right. But is this really, look, it's still way below the breakdown level. So people are just buying some option volatility this week. DAX, nothing going on still. Watching to see if it closes above 16,103. Because if it does, then I'll watch for a retest of this high area. The notes, we have a wonderful triangle pattern. Ugh. But the key breakdown areas, I'm not even using the triangle. I'm watching 112.30. The breakout area is 114.04. Other than that, don't get chopped. It's a bunch of yuck in here. It's not even a good double pattern in there, so forget about it. The 10-2s, still, after stalling at the first target, little bounce this morning, but we could easily see another push down to minus 82 basis points. Dollar index technically triggered a very sloppy lower probability double top. I'm more watching for a flagging pattern coming back. This is looking like a flagging pattern. Why also? If we look at the euro triggered a sloppy double bottom and it's flagging too. So I'm keeping an eye on those from a flag perspective before the next rollover play for the euro and the next possible push up for the dollar. But we could easily still see a pullback in those. Crude, that's what I was talking about. Crude, big drop this morning, testing very key support. All right, very key support. If we start breaking below that support in crude, remember we did close below the 62.5 before the little pop run up. 66.50, then 65. Gold, you know, I take some days off and gold's still sitting in consolidation. Silver watching for the end of this flag and then another rollover to make a more substantial bottoming pattern. So if gold breaks the flag to the downside, then I'm going to be watching for a further pullback and more substantial bottoming pattern in that. We already looked at the euro with the triggered double bottom. The pound has nothing really besides next push up 126.33. Bitcoin, with everything going on with that, you know, I'm not even interested in cryptos right now at all until the dust settles. And still longer term, I'm watching for lower prices. Tesla with the big pop up last week with the GM and Ford announcements. Closing above the 62.5 also on the weekly. So could we still see pushes higher? 261.45, 288.06 are the key things. Pullback level is about 222 to 215. Minor pullback levels from the gap fill between last Thursday and Friday to 234.86. Is there any short patterns? No. NVIDIA still, after triggering the head and shoulders, still holding the rotation zone, but we'll be keeping an eye on this. Nothing's been invalidated. All right, that's where we sit overall. Let's get the spiders and the Qs. So the spiders coming up, the 432 next harmonic was the high area on Friday, 434.56. So again, on any push up would be back to 432, and then I don't really have anything to 434.56. You can see here there's not a lot. I mean, this is already above the key area from August, not from the high area of August, which is 431.73. So that, again, that 432 area is going to be key, but once it gets above there, there's not much. The pullback level, I'm watching Friday's low and Thursday's close. 429.13 area, 429.13. And then below that, you got major support coming in at 428 and then 426.50. Even on a pullback here, you see here, even the 426.50, just back to the daily rotation zone and the prior daily support that held for 4 days. You'd really have to start breaking below that. And then that's not even to the bottom of the rotation zone. So that's what I'm saying. There's just, not saying you can't have some bigger pullback, but there's just no patterns confirming it yet. With the Qs, this is a triple top on the daily. Right now, 456.14. Next level, 356.14. Next level, 360.02. I'm going to bump that up. So remember 360. I'm going to the longer term pause from last week. So about 361 is your key resistance and 364.50. Right now, we're trading above key support coming in at 355. 355 for key support on any pullback, and then you potentially have the gap fill from Friday, 354.50. So 354.50 to 355. The daily, let me update this too. I didn't put that to the correct high. The daily major support is roughly coming in right about 349 to 350. Good morning, Anissa. So we're still in major go-go juice. Yes, we do have waning momentum. We have some potential divergence tops, but any pullback has not formed a significant major top yet. We didn't even trigger the diagonal end of wave 5 in the S&P for all those fans of Elliott wave. So nothing's triggered yet. Shop 62.62. Yeah, shop would be interesting over 62, 62, 60. Yes, you minor, but you got to really watch the 64.50 area. It's got to really break above 64.50, and this is a valid on the weekly, so it's nice because it's bounced up from the weekly rotation zone, but if this pattern fails below 55.42 on a weekly basis, it does trigger a double. So that's a great potential stop area. And that would also take it back below the 50 on the daily, and you have a huge gap left behind. So as long as that's not triggered, it's still technically in bullish mode. All right. That's about it for me today. Just wanted to jump on. Apple, by the way, still keeping an eye if it pushes up to 180, just above 183, 183.04. I will be watching for the potential topping pattern in Apple. Why am I watching Apple? Because it's one of the mega caps that has been leading but hasn't pushed above the highs from Monday. So keep an eye on that. Even if you don't trade it, keep an eye on that because of the mega cap status. And that's been really leading. Microsoft also is barely holding the daily rotation zone. So you've still got some strength in these things, but they're waning a bit. Oracle's today after the close. And Oracle is just on a tear. On a tear. Broke above the key major levels. Now, again, this is where if you learn one thing, when you break like this, learn to use your reverse harmonics. 112.04, you're trading 114, so 112.04 becomes support, and then it would be back to 109.85, 117.73. Those are your next targets. The major support on the weekly basis is 102.60. Let's just call it 103. That's the prior breakout area with the rising weekly rotation zone. And that's near the bottom of the daily rotation zone. Now, this could get up to exhaustion levels with earnings coming out today. I would not be chasing it higher personally. I'd be watching for some kind of pullback, but that's where we sit. There's, if you're already long it, 117.75, roughly the next key target area. Beyond that, if it still goes into super bull mode from the COVID lows, you can use 114.67 as a minor area today, but 123. That's your next major target should it keep going with earnings. All right. With that, I hope everyone has a fantastic trading day, and I shall talk to everyone later. Thank you for tuning in. Bye for now.